Ever get that feeling? Like a market is just coiled, ready to spring. That sense something huge is about to happen.
Yeah, like standing on the edge of something big.
Exactly.
Yeah.
Well, Raoul Pal calls that the banana zone. And for us, wanting to stay informed, getting ready for that is key.
Absolutely. Nobody wants to miss out. Or worse, get caught off guard.
Right. So that's what we're diving deep into today. We've basically gone through Raoul Pal's recent YouTube analysis.
The one called Hold Tight. The banana zone is about to unleash a market tsunami from Savvy Finance.
That's the one. And we've pulled out what we think are the absolute must-know insights, really trying to pinpoint when this explosive phase might actually arrive.
And crucially, what signs Powell is watching for? What are the triggers?
Exactly. Think of this as like your shortcut. We're distilling it down, giving you the core takeaways without you needing to sift through everything yourself.
Saves you some time.
Hopefully. So our mission today, unpack Powell's timeline for this banana zone and identify those key indicators he's tracking in the crypto market.
Sounds good.
Okay, let's start with the concept itself, this banana zone. What does Powell actually mean by that?
So the banana zone, the way Powell describes it, it's basically a period of like really intense, fast gains, market euphoria,
Right, things go parabolic.
Kind of, yeah. But he makes an important distinction. He says, right now, we've only picked up the banana again.
Picked it up, meaning?
Meaning we've seen some good signs, some positive movement, but we're not in the full-blown banana zone yet.
Yeah.
The real one, where, as he jokes, everybody's getting hilariously rich, that probably doesn't kick in, he thinks, until Solana breaks its all-time highs.
Solana specifically. Why Solana?
Well, he points out it's a pretty significant holding for a lot of crypto investors, so a breakout there would likely create a big wave of excitement and maybe wealth effect.
Okay. But is Solana the main trigger?
It's a big factor for the altcoin space feeling rich, but the ultimate key, the thing that Powell believes really unlocks the whole banana zone, is Bitcoin.
Bitcoin breaking its all-time high.
Yeah, decisively breaking above its previous peak. That's the main event in his eyes.
That makes intuitive sense. Psychologically, a new Bitcoin high changes the game. What happens then, according to Powell? What's the fallout?
Once Bitcoin clears that hurdle, he expects a big psychological shift. Capital starts to rotate.
Rotate where?
Down the risk curve, as he puts it. People start looking for bigger percentage gains.
Okay.
They'll do the simple math, right? Powell lays it out like this. Maybe Bitcoin goes to, say, $300,000 this cycle. That's a solid maybe 3x from certain levels.
Okay, 3x for Bitcoin.
But then they look at something like Solana. Maybe that could do a 5x. Or Sui. He mentioned Sui quite a bit. Maybe that has potential for a 10x relative to that same Bitcoin target.
Ah, I see. So the gains in Bitcoin fueled the search for even bigger gains elsewhere.
Exactly. It's a cascade. Early profits funding more speculative bets down the line. Risk appetite increases across the board.
Got it. Now, Powell emphasizes liquidity quite strongly. He says it's like the main thing driving prices.
Yeah, he's really big on this. He estimates liquidity accounts for maybe 90% of crypto price moves.
90%, wow.
And even higher for the NASDAQ, something like 97.5%. It's the dominant factor.
So what does he mean by liquidity here? Just money flowing in?
Essentially, yeah. He's talking about global M2. Think of it as the total amount of easily accessible money sloshing around the global system. It's the fuel.
Okay, global M2, and there's a lag, right?
That's the key insight. He points to a roughly 3-month lag between changes in global M2 and the market impact.
3 months.
Yeah. So, for example, he suggests the liquidity drain we saw back in Q4 of last year. That's why Q1 felt a bit sluggish.
Ah, so it wasn't about tariffs or other narratives people were talking about.
He thinks those were secondary. The main driver was that lagged effect of lower liquidity from Q4.
Interesting. So M2 changes, then 3 months later, markets react. Does that always hold?
Well, he does add a caveat. During the really strong bull phase, you can get a temporary decoupling.
How so?
Network adoption, FOMO, fear of missing out, that can sometimes override the immediate liquidity signal for a bit. But underneath it all, he believes liquidity is still the fundamental tide.
Okay, that 3-month lag is definitely something to keep in mind. So, given that, and what we've seen recently, what's Powell's short-term outlook, like now through the summer?
Right, so based on the dollar and interest rates correcting a bit in recent weeks, That signals improving liquidity conditions effectively.
Okay.
So he anticipates we could be entering a banana zone period, like right now through maybe July,
Strong couple of months, potentially.
potentially. But then remember the lag.
The 3-month lag, right.
So factoring that in, he's looking towards a possible market correction around August.
August pullback. Okay.
And he stresses this isn't unusual. This kind of surge, followed by a correction, aligns pretty well with patterns we've seen in past cycles.
So history suggests a summer rally, then maybe a breather in late summer. Makes sense. He also mentioned gold, didn't he? How does gold fit in?
Yeah, that's another interesting observation he makes. He sees gold prices reacting almost in real time to those broad financial conditions, the dollar, rates, oil prices, that sort of thing.
Gold moves instantly.
Pretty much. But crypto Bitcoin and also the NASDAQ Q, they tend to lag those same conditions.
By how much?
By about 3 months again, that lag keeps popping up.
Okay, so gold is like a leading indicator.
That's how he positions it. The recent correction in gold might be giving us an early hint about where crypto could be headed, 3 months down the line.
So watch gold for clues about crypto's future moves.
Got it. Let's talk altcoins then. Alt season. Pal mentioned Bitcoin dominance peaking.
Yeah, he tweeted about that recently. He thinks Bitcoin dominance, its share of the total crypto market cap, has probably hit its peak for this phase.
And that's significant because...
Because historically, a peak in Bitcoin dominance, especially after an initial correction within the broader bull run, often signals the start of alt season, or as some call it, silly season.
Silly season.
Yeah.
Okay. Where alts outperform Bitcoin. Exactly. In percentage terms, altcoins start to really take off relative to Bitcoin.
Can you give an example?
Sure. Like if Bitcoin goes from, say, hypothetical numbers here, $100 to 150K, that's a 50% gain.
Right.
During that same move, an altcoin like Sui, which he's mentioned, might triple or even more. The gains get amplified.
And we've seen this before. Big dominance drops.
Oh, yeah. He points to 2021. Dominance fell from over 70% down to around 38%. Took just a few months. And 2017 was even more dramatic, like 95% down to 35%.
Wow, okay, so it can happen fast.
Very fast, 2 to 4 months sometimes. And Pal's personal bet, or at least a focus for him right now, seems to be Sui.
Why Sui specifically?
He notes its consistent outperformance recently and also the factor of a low free float.
Low free float, meaning less supply available to trade.
Exactly. In a bull market, when demand picks up, a limited available supply can really magnify price increases.
Makes sense.
Where?
High in demand. How does Sui stack up against, say, Solana or Ethereum, in his view?
Well, technically, he mentions seeing a breakout pattern on the Sui versus Solana chart. That suggests to him Sui might continue to outperform Solana in the near term.
Okay, edge to Sui over Solana for now. What about Ethereum?
He definitely doesn't count Ethereum out. He actually makes an interesting comparison. He sees Ethereum potentially acting like the operating system for finance.
Like Microsoft was for PCs.
Kind of, yeah. Because it has such a large established developer base, and institutions are getting more comfortable with it, especially with all the layer 2 solutions scaling things up.
So Ethereum is the foundational layer.
That's the idea. He also notes, other things like XRP, Doge, they tend to correlate too, move with the general market tide.
Any key levels for Ethereum he's watching?
He mentioned $4,300. A break above that could be a really significant signal for ETH.
Okay, $4,300 for Ethereum. Now, shifting gears a bit, NFTs. How do they fit into this banana zone picture? Will it be like last time?
He expects it to be a bit different this cycle, more mature, maybe more segmented.
Segmented how?
He sees kind of 3 main buckets. First, Web3 consumer brands, things like Doodles, Pudgy Penguins. Second, pure digital art. And third, PFPs, the profile picture projects.
Okay. Any standouts for him?
He talks about CryptoPunks quite bullishly, thinks the floor price could potentially hit something like $500K.
$500,000 for a punk. Wow.
Yeah. He sees owning one as almost like a status symbol, a rite of passage in the crypto world. He also mentioned Crypto Dick Butts.
Okay.
It's another PFT project with that kind of strong early community vibe and potential upside. And Xcopy for digital art, noting his success comes partly from having a wide range of accessible pieces.
So established names and strong communities. Any new trends?
He expects more innovation, maybe hybrid ideas, mixing memes with NFT tech, moving beyond just static pictures.
Right. And platform shifts. Are NFTs moving off Ethereum?
We are seeing projects migrate to faster, cheaper chains like Solana and Sui, definitely. But Ethereum still holds a huge amount of activity. It's not going away.
How does he view NFTs from an investment perspective within this cycle?
He uses the analogy of NFTs being like call options on our underlying blockchain.
Call options, meaning leveraged bets.
Sort of. His example was if Ethereum triples, maybe a related NFT project on Ethereum doubles on top of that.